327.53% on one single contract. If you're going uptrend to downtrend using Happy Trader and you have your alerts going to your phone, you buy on the uptrend, you can see the buy AI right here. And then on the downtrend, you're selling, right? So that's exactly what this is back testing. What's going on? It's Ryan here, CEO and head quant at happytrader.io. This is going to be a very quick video. Just want to go over the year to date for the NASDAQ. I like to do videos like this very frequently to show and just further elaborate on the fact that happytrader.io is the best performing indicator on TradingView when you're talking about the indices, the futures, and a lot of individual tickers as well. And if you hit subscribe, you can see a lot more of the back test. So we're going to get right into it. We're not going to fluff this video up whatsoever for the algorithm. The algorithm doesn't like us anyway, and that's fine. We're just showing everybody how to make a lot of money in the stock market potentially. And again, this is not financial advice. This is for educational purposes only. The first thing we want to do is just look at the NASDAQ. We're going to use the overnight margin. We're not using intraday, and we're going to go ahead and run our back test. So let's pull up our strategy tester. You can ignore everything that you see there. We need to set this thing up and restart it. So we're going to set that 23,000. We're going to have the order size as one single contract. Now, a lot of traders scale in, scale out. You can subscribe to the channel to see how we scale, how we hedge. What do we do when the market goes against us? Very important things to know because you don't want to be just sitting there holding the bag because the market can and will keep going in the opposite direction that your trade is in. Okay. So I just really wanted to emphasize that. So the next thing we're going to do is tab over to deep back testing. We want to look at year to date 2024. So obviously we need to bump this forward a week and change. We are going to go ahead and just double check our parameters, make sure that we have everything in place and run the back test and see how we're doing percentage wise and take a look at the graph. Now we're looking at the 45-minute time frame. We're going to look at a couple different other time frames as well. You can see 219% on one single contract on 47 trades and percent profitable 40%. The market's running pretty hot and it looks like it decided to resolve to the upside after this carve down here. So we're starting to kind of drift upward. The Fed just announced that they're reducing interest rates. So we all know what kind of happens if we're kind of in the know in the market. We kind of know what happens when inflation is still kind of there. We have an election cycle and things are just really volatile. But for now, the market reaction to the rate cut quantitative easing is going to be positive because it's going to cost less for everybody to borrow money from each other. And that's really going to be a positive for the market historically when they start QEs. We have 219.46%. And let's go ahead and look at the list of trades here on the 45-minute chart. You can see that on even on all of our losing trades, even though we've only won 40%, you can see massive run-ups. So what does that tell you? Well, if you're not using automation, which, we haven't released yet, but we do have it finished and we're working on getting that released, you can still take a lot of scalps on these uptrend and downtrend signals. Now, we're not trading off of these signals here. We are not super trend and we do not operate like super trend at all. But you can see some of these moves, some of these uptrends. And what we do is just go into our strategy tester and back test everything to make sure that, this is going to be positive as far as the expectancy. And you can see that we did have a drawdown to about here. Now, again, delta hedging is always a possibility, taking profit as you're kind of going down. Like I had mentioned in another video, if you kind of go down below a double bottom, hey, maybe it's time to take some profit if you started here. If you start on a dip here, hey, maybe it's time to take some profit here. Maybe you don't have to be super greedy and just hold everything forever, right? You can scalp, but you can also run automation using webhooks if you are inclined to do so. Our software is done being developed. It is in active testing, but you can get these alerts to your phone for now. And in the future, you can set these webhook URLs with our automation software that we're going to be releasing. That way you can run overnight trades if you want. So our biggest thing is we want to make sure everything works perfectly before we release it out to you. So just looking at the back test, you can see phenomenal. Even regardless of what your commission is, 47 closed trades, 219%. I mean, you just can't argue with that. Let's go ahead and head down to the 15-minute chart and see what that looks like. Should be, woo, that is a wild one there. Okay, so we didn't have as big of a drawdown. You can see the time frame matters. Percent profitable, 1 out of 3 trades. That's normal for Happy Trader. Obviously, on a lower time frame, you are going like 15 minutes, you are going to have more trades. That means more commissions, but look at how much money you made, right? So you did great. And you can see the average trade expectancy 255. Again, 1 out of 3 trades, one win rate is not the metric. It is expectancy. That's what you want to be looking at. And you can see that once we got out of this little dip here, it was nothing but profit. Now, did we have drawdown? Yeah, we did. But on the 15-minute chart, surprisingly, only 47%. Now, let's go ahead and head into the 5-minute chart. This should be a lot more volatile. Let's see how many trades we have. We have 327.53% net profit on one single contract of 75,660. Now, again, that's if you're going uptrend to downtrend using Happy Trader and you have your alerts, going to your phone. You buy on the uptrend, you can see the buy AI right here. And then on the downtrend, you're selling, right? So that's exactly what this is back testing. And you can see there's just a lot more trades, so you get a lot more chop. And you can see here, kind of going down, but not quite touching like we did on the 45-minute. The drawdown 40%. No free lunch on Wall Street, like I always say. The average trade expectancy over all 477 trades, and this is what's amazing because it's going to cover your commission, and that's exciting. So no matter what your commission is, you know that your average trade expectancy, including your losing trades, is going to be 158.62. And that's going to be, 0.04% on every trade on 5-minute chart. That's going to add up. And that's not accounting again for scaling in, adding contracts, stuff like that. All stuff that we're going to be getting into. But we did not have to utilize a delta hedge. We have our hedge set, to kind of jump in here. So if we put on a position, we might hedge to here. And then when we get up to about here, start peeling it off, start touching down here. Well, we didn't hit here, so we don't have to put the hedge back on. So we just monitor and then set the hedge to that price. So when the account hits that price and when the account hits that value, right, we are going to make sure that we reestablish that hedge until we are definitively in the green and we can start peeling it off. And if you want to know how to hedge, subscribe to the channel. So that's really going to do it for the NASDAQ. Again, Happy Trader just continues to outperform everything out there. For comparison, like I say in like almost every video, the stock market sitting there buying, holding SPY, it's going to return like 7 to 11%. If you really want to get into more accelerated type gains, futures trading is definitely the way to go for that. We're going to be working with a couple prominent brokers here shortly to get everybody all set up with the automation. But for now, we do have the best indicator if you're a scalper. You can see in the list of trades here, even on all of these losers, look at these run ups, right? So these signals are producing great run ups. You don't have to trade signal to signal. You can use your own trading methodology. But again, I'm not sitting here telling you how to trade. You can trade how you see fit, but you can also sim trade to get used to this type of thing. Me personally, I like to get all the way out to the 45-minute chart, and it's just for the simple reason that we have less trades. So I don't really care about squeaking out that extra couple percent because I know if we draw down to here, yeah, it's really terrible, right? If you're just following and you're trying to hold this position throughout a long period of time and your strategy is not to scalp, but it's to do more of a swing trading methodology, yeah, it's going to really not be great when you get all the way back down here. But again, you can take profit depending on how your style of trading is. You don't have to trade the way that we backtest, right? So I just want to reiterate that. But as far as percentage gain versus any stock out there, any hedge fund out there, we are absolutely crushing. And over the course of a longer time period, like 10 years, make sure you subscribe for those videos. We do those often, 5 years, 10 years, to make sure that you know that you're getting a product that back tests out well, even in down markets, right? So markets tend to drift up over time. So for our longer macro back test, we use the long only. It's really hard to effectively short the market without knowing information. And we all know who knows the information and who doesn't. And retail is not who knows the information, right? So long only is the way to go because we know that our edge, right? So as a baseline investor, our edge is that we know over time in the market's going to eventually go up. They're going to throw us some peanuts for being, liquidity providers. And then the funds and institutional investors are going to be making, way more money. So this is a great way for a retail trader to come in and start making some serious money, using these derivatives, right? So again, that's really going to do it for today. We're just looking at the NASDAQ year to date 2024. My name is Ryan, CEO and head quant at Happy Trader. Have a great day and happy trading.